insurance companies essentially have insurance, which is reinsurance. What a lot of the different tie-ups in these different companies have been saying is that the cost of reinsurance has been rising. And it kind of makes sense because globally interest rates were at highs, like say, like say 5-10 year highs. And essentially what that is saying is that if there is an insurance company, says company, Thaon's company, GNAC approaches Thaon's company and says, yo, we would like to get some insurance for some of these claims that these people, or some of these contracts that we've written for these people, just in case they end up claiming the money. Thaon, the rate of return that GNAC could give that person could be, suppose Thaon's company, or suppose GNAC is giving Thaon's company a 10% return on the investment. So if Thaon's company was to lend GNAC $1 million US, GNAC would say, "Yeah, we're gonna give you back $100K US plus your principal." So there's a risk in that though, because what if GNAC starts to have issues with their business? There's risk to that. Versus, and then that company, Thaon's company, is deciding, yo, what if I don't lend to Thaon's company? What if I lend to someone else? Or what if I, for example, put my money in much lower risky stuff? Generally, what's regarded as low risk would be like government bonds, things like the US government bonds, where it could be giving me a similar return, or maybe even slightly less return than the 10%, maybe 8%, but there's much lower risk. I'd be willing to, like, would you rather take 10% with high risk or moderate risk versus 8% with low risk? So essentially what they were seeing was that it was getting harder. The insurance companies in Jamaica and other globally too are saying, hey, it's getting harder for us to get insurance essentially. And because of that, if you think supply and demand, if there's less supply of the money that we can use, there's going to be, and there's high demand, is going to be a rise in the cost. So essentially the amount or spread, because remember, they have to, every contract an insurance company writes, they have to factor in, if they're getting reinsurance from it, they have to factor in that in terms of the pricing that they give you. So it's not like, yo, they sell you a contract worth 100K and they get to keep all of that 100K. Depending on the ratio, sometimes they only get to keep 50K of that. Sometimes they only get to keep 20K of that. They only get to keep a percentage depending on how much, whatever contract they have with their reinsurer. So what was starting to happen was that because there was less reinsurance money out there, so there's less supply, and there was still a high amount of demand, or say it's the same amount of demand, the cost went up. So it's like they're essentially, the profit cut that insurance companies could make from going to the reinsurance money was less. So it's like margins were essentially getting squeezed. And there's other things to factor in too, because things like hurricanes, remember, based on our location in the Caribbean, we are in the path of a lot of these hurricanes. And if these hurricanes could damage the cars, and we mentioned GNAC, remember, is heavily exposed in the motor insurance or vehicles in general. If a wicked hurricane was to come, God forbid, then GNAC could face a lot of claims. And so an insurance company, suppose they're looking at, I could either lend the money to GNAC, but then GNAC is in these countries, and then these countries could get hit by these really bad hurricanes I'm seeing on TV. Or what if I lend to this other country, which doesn't have hurricanes, doesn't have these things? Maybe they have some other stuff, but I'm less scared of that happening. So you had that money sometimes shifting away. So essentially what that was seeing was that the cost of insurance was likely to go up because GNAC and other insurance companies have to factor that in, because they're saying our costs are rising, so we're going to have to raise your price. Like, yeah, we can absorb some of it, but we can't absorb all of it. We still have to be profitable. And so the high ups of the company acknowledge it. PB Scott, chairman of the company, he said in a Gleaner article September 2023, he was saying that the biggest issue for the company was tightening of the reinsurance market. You're saying it correlates to capital available to be put into reinsurance funds, Less money is available, but we have exceptional relationships with our reinsurance partners. He says, General Accident is in a fortunate position in that we expect to expand our insurance business in spite of reinsurance capacity shrinking. And we will see that in the next 18 months. So, yeah, that's kind of what's going on in the reinsurance or in the insurance industry.